But another big outperformer has been Maharashtra Seamless. The numbers were very, very good. The stock as well is near a 52-week high, and they reported very, very good set of numbers in the past quarter. What's the outlook for business, though, from here on? Remember, they are into pipes. Both they make seamless pipes as well as ERW pipes. Mr. Saket Jindal, the managing director of the company, joins us on the show. Hi, Mr. Jindal. Good morning. Thanks so much for joining in.
Morning.
Well,
Morning.
Let's brush aside first the sales volumes numbers. For the past year, the seamless sales volumes were around 440,000 odd, and the ERW was close to around 82,000. What's the outlook from here on in terms of volumes?
Right. So in the current year, we expect some growth, at least 20% in the sales of both the products. And the exports, which are currently a little slow down, but we expect it to come back in the next quarter. And the domestic oil and gas sector, there is a continuous, consistent demand. So we are also supplying to NGC subsea line pipes, so which is another value-added product besides the drill pipe. So the domestic demand will remain intact, and we expect a good performance.
So volumes will be higher by close to 20%. We get that. Could you tell us exports in the past year? What was the contribution to revenues? And given that the globe itself could be in a bit of a flux, going by the interest rates, potential slowdown in the United States as well. So what do you see exports contribution in this year?
Exports would be similar. I think we have been exporting almost 30% of our production, and mainly to USA and Canada. And we will explore new markets also, like we got some orders in Egypt and Europe also. And there are limited tenders in oil and gas and Middle East where there is limited competition. So we will aim for that chunk of orders also.
Okay. What does all of this mean, Mr. Jindal, for your EBITDA per ton on both the segments that you operate in right now, which is Seamless and ERW? What kind of growth do you see in both those segments on the EBITDA per ton?
Right. So EBITDA per ton in Seamless was a good figure. Last year was 20,000, and we expect to maintain that. And in ERW, last year was less, but we will come back to the normal figure, which is, say, 7,000 to 10,000 per ton.
Okay, 7,000 to 10,000. But last quarter, it was around, in FY23, it was 8,400. So it will be much better than that, you think, in FY24?
Yeah, we expect through control in raw material prices, there is correction in the steel prices. So by choosing higher value orders, we are targeting to achieve that.
All right, Mr. Jindal, the problem that the street has with regard to Maharashtra Seamless is in the past, when things are very, very good, you're flush with money. But what do you do with that money is crucial. So could you tell us that, given the visibility, order book is good, demand is good, you're talking about good volumes as well, you're sitting on cash actually. Could you tell the viewers whether or not from this money that you're going to generate, will you again go and give some ICDs? In the past you'll have done some intercorporate lending, which disappoints the stock market. That will not be replayed this time around. Will you focus on capex, focus on inorganic growth?
Right. So we have plans for capex. Like we are planning projects in cold drawn facility and heat treatment facility. So these are value addition on the pipes, and this is one avenue. Plus, we want to upgrade our existing technology through automation. So in the 14-inch mill, which is a plug mill, we can make significant automation, which would be another avenue for capex. So plus we have a plan for making premium connections, which are connections for high pressure applications in the oil and gas sector. And this we want to tie up with the collaborator. We're talking to JFE of Japan and other players.
Mr. Jindal, we have some of that capex plans that you have spelled out. My query to you is that the message you're sending out to investors is, all the money that will be generated from the business, all the cash, operating cash flows as well have been very healthy. Plus you're sitting on cash and books. All of that will be used for capex of the company, and you will not go via that ICD route, that is lending to some group companies.
Right. So that would be, we would try to minimize that, and we would focus on our core operations and addition of facilities.
Oh, okay. So it's about 800 crores, right? The cash on the books. At any point, would you be looking at any inorganic acquisitions?
Yeah, we are open for acquisitions, and
Okay.
if there is something attractive fitting into our business plan, then we are open to the idea.
Is there anything on the anvil, sir? Since you're sitting close to around 750, 800 crores, and your ICDs by this year, it'll be cleared, right? The money that was outstanding.
It is not certain. Depends if we require for our capex, then naturally it can be taken. And currently, we don't have any acquisition concrete, but we are, scouting around for it.
Okay, I just had one question on exports. You were mentioning earlier how exports have picked up. Can you tell us what exactly is the share of exports in the overall business right now, and how much do you plan to grow it by? Will it also enhance your margins further, the improvement in exports?
So, basic ballpark figure is around 30%, but in the recent quarter it has been less because of the slowdown in the US-Canada market. But I think we will come back to at least 30%.
All right. We'll leave it there, sir. Thank you very much, Mr. Jindal, for joining us and running us through all of that detail. Thank you.